Welcome back to Investago TV's weekly review, your go-to source for global economic updates, market trends, and financial insights. Ready? Let's get started. The US Bureau of Labor Statistics reported a 4.1% U3 unemployment rate for June 2024, a slight increase indicating a potential recession as per the SAM rule. This rule, developed by economist Claudia Sahm, signals a recession when the 3 months average unemployment rate rises by half percentage points from its low in the past year. With the current rate at 4.1 and recent rises in jobless claims, this criterion is met. Fed Chairman Jerome Powell hinted at possible policy adjustments if economic weaknesses persist, potentially reversing rate hikes to stimulate growth. Oil futures settled slightly lower on Friday due to mixed signals from US economic data. Brent crude dropped 37 cents to 85.03 per barrel, while Texas Intermediate fell 41 cents to $82.21. Despite weekly declines of over 1.7% for Brent and 1.1% for WTI, investor optimism remains due to potential Federal Reserve rate cuts in September. Weaker consumer sentiment and slight increase in the producer price index were noted, but strong US fuel demand, especially around Independence Day, provided some support. However, falling Chinese crude imports may counteract this positive outlook. Gold prices surged close to record high, driven by expectations of Federal Reserve rate cuts and increased bets on a potential second Trump presidency. Spot gold rose 0.8% to just below $2,044.3 per ounce, nearing its peak from May. The metal is up nearly 20% this year, buoyed by anticipated Fed rate cuts, central bank purchases, and geopolitical tensions. Fed Chair Jerome Powell noted confidence in inflation declining toward the 2% target, fueling expectation of multiple rate cuts. Additionally, Trump's rising candidacy adds to market volatility, further enhancing gold's appeal as a safe haven asset. Brazil's economy grew slightly less than expected in May, with the central bank's economic activity index, a proxy for GDP, rising 0.25% from April, below the 0.3% forecast. April's growth was revised up to 0.26%. Year over year, the index gained 1.3%. Despite this, growth estimates for Brazil have increased, leading policymakers to hold interest rates at 10.5% in June. Retail sales, services, and a tight labor market show resilience, with growth expected above 2% for the year. Inflation remains a concern, forecasted to end 2024 at 4%. President Lula da Silva aims to boost the economy through policy spending. We're signing off for today. Don't forget to stay updated and follow us on our social media. Keep up the great work and see you next time.